Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video corresponds to an interesting online company. Online, you can say, or mobile phone technology company that has done well. They are in the advertising space on mobile phones, etc. So we'll discuss about that and a little bit on the markets. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I am not a member of the NSC and BSC, and that I am not a portfolio advisor. Whatever decisions with respect to investments or portfolio you take, kindly do consult your financial advisor before doing that, and do understand that it is laden with market risk. So whatever decisions, whatever discussions I have on the markets and stocks is purely on the basis of my experience over the last 11, 12 years into the market. Before I talk about this company, here's small request. Kindly support me on Patreon. Once you do that, it will help me grow the channel. Help you also ask me questions, seek out answers in greater detail. Once you get the $10 per month membership, you'll get access to my portfolio, my watch list, and a number of podcasts that I make available from time to time on short-term, long-term calls, discussions on domestic and global economics. You have discussions on the markets as a whole, global markets, Indian markets, etc. Plus weekly long-term pick. I do bring that up, which you can also buy by going to the Patreon website. You can buy separately. I have also made available from today onwards my watch list and portfolio, which you can go ahead and buy separately if you don't want to become a member, but there's a higher cost for that. For buying it as you can say separate or individually, you can check the link in the description to do that. Now, in order to discuss about the company and the markets, let me take you to the screener website first. So that's FL India. That's what I'm going to talk about. Came out with decent numbers in an environment where the numbers are not that great, in a difficult economic environment that India is going through at the moment. So we'll discuss about that. But let's just discuss about the markets first. So we are at 23,600, 23,580, 600. What I have mentioned over the past 1 week, 2 weeks, that has been playing out, that around 23,000 to 23,300, there is massive support. And this is a weekly chart, a 5 year weekly chart. And if you see closely, this is the 50-week moving average. The red line is the 50-week moving average, which is around 23,200, 250. And we went to 23,250 a day back, and we have recovered from there. So I expect a bounce, a decent bounce from there. In terms of RSI, on a weekly RSI basis, uh, we have seen that it dipped to around 40 levels, 40, 40.5, and then recovered. So all ingredients are in place for a decent rally in the market. What one need to be aware of is December is normally a decent, uh, uh, not the best of the months, but good month overall, because the large investors, you can say FIIs, DIIs, institutions, do buy into it because they have to prop up their books by the end of the year. So probably second half of December, from 10th of December, things should look even better. So we don't know. We might see a fall by January, because the December quarter numbers would be out by end of January, and then majorly in February for the mid and small caps. So we may see a sell off from mid Jan onwards, but there could be a 1 month of rally, and that will only give strength to the bears to sell at highs. So we may go to say 24,000, 24,400, and then sell off from there and come back to 23,000. But it is very difficult to see 23,000 to be broken that easily. I come back to the Nifty earnings. I believe that 1100 rupees will be the earnings for FY25. And if that is the case, then at around 23,000, say we dip to 23,100, based on 1100 rupees will be trading at only 21 times current earnings, which is not expensive at all. So 500 points lower from here, 400 points lower from here. uh, I don't see that the market will be ultra expensive. We were trading at 24 times for a longish period of time throughout this year, and now we'll be at 21 times. So value will emerge into select sectors, and I believe that large institution investors, especially in India, will buy big time around those levels. I don't know about the FIIs because there is a issue with respect to the dollar index, which is going higher, and so foreign investors would like to invest in US because the dollar is strengthening. But the markets may not go down that much below 23,000. That's the call. Coming to the stock, so FL India is the stock, small cap company still, but a larger small cap company, 22,000 crore market cap, hasn't done much over the last 2 3 years, trading at around 1550 rupees, made a high of 1715. So incorporated in 94, FL is a global technology company with a proprietary consumer intelligence platform that transforms ads into recommendations, etc. So basically they are into mobile advertising domain, in which they provide technology for different companies, corporates, to transform advertisements into potential businesses by recommending ads to potential customers, clients, and those things. So a lot of AI thing do come into it. That's how the business has been, and since its IPO, it has done exceedingly well for its investors. Consistent growth the company has shown, and that's why the PE is still, after the correction, is around 63, 64. So if you go by the numbers, if you look at the numbers, then we are in a situation where in the September quarter, what they did on a consolidated basis is that they did around 543 crores, if you see here, versus 430 crores. That's a decent again jump of around 22 23%, and gradually over the years they have consistently delivered 20 to 25% sales growth and 30 to 40% profit growth, and that has been the marquee performance of the company. So operating profit 113 crores versus 87 crores is just about uh, 25 27% in terms of that. Margins expanded a bit from 20%, it has gone to 21%, and bottom line expanded because there was a call of the other income, which was 29 crores versus 10 crores. So other income increase, so bottom line swelled even more. If you look at the balance sheet, then the company has consistently increased its reserves. In FY18 they had around 6 crores. Today they have over 2600 crores, which is pretty good in terms of cash flows. Cash from operating activities has increased consistently, it's around 260 crores at the moment. And if you look at the shareholding pattern, promoters hold 55% of the stake. FIIs have increased stake over the last 1 year. So very few in very few companies, FIIs have continuously increased stake. FL is one of them. DIIs have remained stable at around 15.5%. Public shareholding under 14%. So overall, the stock is looking very decent at these levels, at around 1550-ish level. If you look at it closely, then you have your 50 DMA around there, and 1400 is your 200 DMA, where the stock has not gone to even in this correction. So overall, a very decent company to look at from a 2 to 3 years, 5 year perspective. If the numbers continue to be good, once the rally pick up, the stock should, or the company should perform. Again, do consult your financial advisor and do your own analysis before getting into it. So this was a video on FL and the markets. So please like and subscribe my channel with the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.